Well, the market leader in the hotel space clocked in about a 60% growth in revenues, aided by standalone performance being extremely strong and some commentary around the global properties as well. Margins came off, but the last time that I spoke to Puneet Chhatwal, he had told us about how he believed that margins overall on an annualized basis would sustain around this 30 to 33% mark, and lots more to happen, including in investor conferences where they've said now that this whole much spoken about Cricket World Cup and the other aspects didn't contribute as much to this thing. So therefore, the base effect need not be a problem. Let's get him in on the conversation as half of the year has gone by to talk about how does he feel about the rest of the year. Puneet, great having you. Thanks so much for joining in. Hope all is well. And how do you sum up the quarter? Did it stand as per your expectations, or were there one or two things that came as a surprise?
No, nothing was a surprise, Neeraj. We monitor on a daily basis and sometimes several times during the day. So the surprise factor was not there. There is only what we call the OFIs, opportunities for improvements. Some are within our control, some are beyond our control. So the ones beyond our control is the market in San Francisco and in New York. I think that is one thing which is a big opportunity going forward, because at some point it will come back to the levels that we have seen before. It's not talking about some city, it's two very classical cities of the world, not just of the US. And when it comes to domestic, the performance was very strong, and some of our big machines like Taj Lands End or Taj Palace Delhi or Taj Mahal Palace in Colaba, and even the recently concluded renovation of Mansingh in Delhi is showing great results. Goa is resilient, Rajasthan is resilient. Bangalore is supposed to do much better in Q3. So I think all in all, what we have seen the first 29 days of October in Q3, there is and the business on the books that we already have secured for November and to some extent for December. And when we compare it to the pace in the year before that, we are way ahead. And it's not like 5, 7, 8, 10% ahead. It's high double-digit numbers. And that makes us a bit more optimistic. And all we have to do is make sure that we get the right business mix and we have the best possible cost optimization to keep delivering on a record quarter again, as we have done for the last 6.
Okay. Just a follow-up there. A clutch of fund managers who heard you at a recent global brokerage conference in Mumbai said that you alluded to how the growth might be structural. Maybe you said this in the call as well yesterday, that the growth looks structural and there is not too much to be read into the contribution from events like G20 and the World Cup, because they did not contribute as much overall. The reason I found that I wanted to ask you about it, because until maybe 6 months ago, the talk of town with every hotel company, including you as a leader, was that G20 and Cricket World Cup will add quite a bit. So explain to us what's happened. I'm sure they are adding significant amounts, but why is it that they won't matter as much in the longer scheme of things?
You see, sometimes that's why we are very careful in articulating what we are saying, and actually almost all the time we are. But the challenge is how the information is received. Now, we did benefit from G20 and are benefiting from the World Cup. But because we are so large, our enterprise level revenue is north of 12,000 or 13,000 crores. And if we get a 200 crore benefit, then it's a certain percentage, right? Less than 2% of the enterprise level. But it is that incremental revenue coming at a good rate which creates the conversion to the bottom line in a very significant way. But if you're a small player, you have 8 or 10 hotels and 2 of them happen to be in Delhi, where the G20 and B20 was, the impact on your portfolio could be very large. So the G20, the Miss World, the World Cup Cricket, the World Cup Hockey, all these events are adding resilience and grit to the hospitality sector. And there is no change expected because there is a difference in 2 years ago and now 2 years from now, with all the convention centers that have got added in Pragati Maidan, in Dwarka, in Mumbai, with Jio, Bharat Mandapam, Yashobhumi, with all the high-speed trains, your highways, your addition of 80 new airports coming in. They have a direct correlation with demand in hospitality, and over and above that, the 6.5% GDP growth and India growing faster than the rest is also helping to boost demand in our sector. So all in all, the narrative from 6 months ago, from my side, has only become more positive. But when you look at the percentage level impact on your business, if you're a very large business, it's low. So if we say we posted a 16% increase in revenue, the base is so large. Right?
Yeah.
Important is, what is our profit after tax? Our profit after tax in the first half is 37 to 38% more than last year, which was the best ever financial year. Do we see changes happening there? The answer is the likelihood that this journey continues is far higher because of all these changes that are happening, and also the impact of foreign tourist arrivals in India for tourism purposes, not for business purposes, is still at 50-60% level of what it used to be pre-COVID. That is an opportunity for us. Our US portfolio is an opportunity, and our biggest opportunity is, as of this month, we'll be opening 2 hotels per month for the next 36 months at a minimum, which means 72 new hotels, almost all, let's say 90% or 80% of it on a fee-based business, which means our management fee income, which was a few years ago at 150 crores, could go up to 600 crores in 3 years from now, with a flow through of 65 to 75%. That is what drives your margin. That's what drives your profitability. And personally, I remain optimistic. I've even taken out the word, Neeraj, cautiously optimistic. I remain now optimistic that the demand pattern, coupled with our not like-for-like growth, will help us stay resilient and ahead of anyone else on the India's domestic sector.
Fantastic. And add to that, although it might be a smaller proportion, but the last time that we spoke face-to-face at the Taj Mahal Hotel, you spoke about how the revenues from the non-room tariff business as well, side of your business, are actually showing strength, and that could add a significant muscle over a period of time. I heard you speak about some numbers around management fees, which is one aspect. Is the other aspect going to aid you over the next 2-3 years more significantly than what it has in the past?
Everything should do, because nothing gets built in a day. So we've been building on all these revenue streams and diversification of the top line. And then we got derailed as a sector globally, including in India, because of COVID. And now we have had 6 quarters and the journey continues. We have created a new business unit and a business unit head under Deepika Rao for the new businesses, so that, Ginger may be an old name, but the whole concept of Ginger has evolved and is absolutely a new brand. But the name was so good that we kept it. And Ginger, Ama, Cumin, all these brands are expected to grow and add resilience and margins to our portfolio.
Got it. Actually, speaking of that, Puneet, margins seasonally, they come off. They came off a lot relative to what was estimated as well. So what happened there, if you will? And do you expect them to bounce back significantly in Q3?
Well, actually, on the first half, we are 0.4% ahead of the first half of last year. And for the quarter, our margin was 1.8 percentage point in Q2, higher than the same quarter last year. So I think it depends what language or terminology we use. Sometimes we use sequential, sometimes we use year on year. We
use year on year, Puneet, but my limited point is just that the expectation that the average of the poll that Bloomberg did was higher. Otherwise, completely agreeable that YOY you've done well. but just relative to what was estimated. The bar is going up with every quarter with your performance.
That is correct, and it'll go up hopefully again. There is a little, as I told you, there is a little dip in the consensus, which is very, very, very low if you look at it carefully, because of the weakness in the US business. And we do believe that in the next few quarters, San Francisco and New York will bounce back strongly, and the domestic will continue to remain very strong in the non-rooms and in the rooms business because supply is constrained and demand is strong. It's very simple, and our not like-for-like growth should keep mitigating any other impact that might come in. And in this time, Neeraj, we don't talk about some other things. We are a company belonging to a group that has always been, big supporter of nation building. And we go to certain locations and have built certain locations, like Kerala. Now, we have so many hotels in Kerala, and there was a Nipah virus. We had landslides in Uttarakhand and parts of Himachal, where we have so many hotels. We even opened brand new hotels in Gangtok in Sikkim, which was, all the roads were disrupted. We opened hardly 2 days and it had to be shut. All that impact has been still mitigated. So when the consensus is being done, I think we need to come from a very high level sometimes into micro, and sometimes the other way around, rise up from too much micro to a high level. It's always about finding the right mix. But generally, what guidance we have given and the slogan that we have used, we promise, we deliver. We have promised 33%, we will do 33%. We have promised growth, we will deliver on growth. We have promised absolute amount of profitability at the same time. We will do that because we own 50% of our assets, and that allows you to have wonderful leverage on comprehensive asset management and creating new sources of revenues and business within the existing properties. And the best examples of that today is Taj Mansingh or even Taj Lands End of late, what we have done there. And last week, we opened a new Chambers at West End. Bangalore never had Chambers, and now it's like state of the art. Maybe our best Chambers today is at the West End in Bangalore.
Awesome. One final question in terms of hotel expansions before the Capital Day, the Capital Markets Day, and please correct me if I'm wrong. You had said that you're on track to open 300 hotels by FY26. You referred to a number, or you revised that maybe during that Capital Markets Day. Today, you've told me that you'll open 2 hotels every single month for the next 36, which is 72. Are you on track for FY26 numbers, or are you revising those numbers, looking at the opportunity? Because you are no longer cautiously optimistic, you are optimistic.
Yeah, that's why we changed 300 to set the likelihood that it's more like 330, 325 or 330 as a total portfolio is very high. And we will be maintaining an industry-leading pipeline. Nobody has signed or opened more contracts in the last few years, and including year to date, than Indian Hotels, and that trend will continue. But already, giving 30 hotels more as a possible stretched target is a lot over the next 3 years, which means we are saying 10 more per annum over and above what we have already guided. So it's almost adding another hotel a month. So, and the hotels have so many restaurants and so many rooms. It's not like opening a shop. So it's a very big job, and a lot of things, Neeraj, is beyond our control. Sometimes we can influence, but we cannot push, and that is the whole ease of doing business in terms of licensing, which varies from state to state, as tourism is a state subject. Whether it's your food and safety or a fire license or a liquor license or what do you call it, as a commitment to execute and a commitment to operate, or, there's so many things that happen in the last few months before opening. And if you get delayed at every step by a week or 10 days only, then you're delayed by 70 days or 100 days. So that's something which we're trying to figure out how to best help states and ourselves in pushing forward on that. But that's the only, like for me, a question mark in the whole scenario. The rest is very much in line with whatever we have guided upon.
Congratulations on the good job then. And I know we don't get often time to talk about a lot of, beyond the numbers conversations or the things that we speak about, but these are small conversations or short conversations. When we do the end of the year conversation, Puneet, in person, my commitment to you is to try and bring about a lot of those factors as well, because they are very important from an investor's perspective. Thanks so much for taking the time out and speaking to us today.
Thank you for having me. Always a pleasure.
The pleasure was ours. Viewers, thanks for tuning in.